Hi there, this is Mike Larson, Editor-in-Chief with Money Show. I'm coming to you from the Las Vegas Money Show, and I'm here with John Dobosz, editor at Forbes Premium Income Report and Forbes Dividend Investor, plus a new letter if I'm not mistaken.
You are correct, Mike. We just started last September, the Forbes Billionaire Investor, and in that we're looking for people who have made their billions, official Forbes billionaires, in investing. Look for stocks that they're buying, that they're selling, try to spot patterns where you have a bunch of billionaires going into one stock, it might be worth looking at, or if you have a billionaire who is moving into a stock by himself that has strong conviction.
Got it, okay.
And then we use some fundamental and technical analysis and come up with a portfolio.
Understood. Let's talk a little bit about your big picture view. Everybody sort of wants to know, the first question, what's the market doing? What do you see the market doing? What's your take on what's going on out there?
The market always tries to make the greatest number, to make fools out of the greatest number of people. And I do believe that because sentiment, you've been in the business for so long, you know this too. When the boat is crowded on one end of it, it's usually going to come back in the other direction. In other words, last fall, when things were as pessimistic as possible, the market rallied and continued to rally well into this year. The S&P 500, people are trashing stocks like they're bad.
Yeah.
But it was up about 7% in the first quarter, which, you annualize that, that's a pretty good year in stocks. So there's challenges, but there's always been a wall of worry that bull markets can climb. Interest rates, we might be at the end of the Fed tightening cycle. I know that more optimistic people in the market think that there will be a quick turnaround to outright interest rate cuts later in the year. That would seem a little bit too quick, unless things really get bad.
Sure.
Why would they spend a year and a half hiking rates at such a pace only to cut them in the future? I don't know, but stocks are always the thing that you should own if you don't need the money for the next 4 years.
Yeah.
And usually we've grown accustomed in the last 15 years or so for instant gratification. You're up 20% and then in 3 months or something. But keep in mind that stocks are a long haul traditionally. That's why I favor dividend-paying equities. They literally pay you to wait. If you're getting a 4%, 4.5% dividend yield, you can take those ups and downs of the market a lot more calmly.
Yeah, absolutely. I'm glad you pivoted to that. When it comes to dividend investing, are there particular sectors within the dividend-paying universe or stocks that look attractive to you here?
There are clusters for sure. I don't want to say regional banks, but regional banks. You have these wild moves that you've never seen before. Since 2008 in banks, but things like First Republic up and down 50%. PacWest earlier this week I saw was up. It had come down quite a bit. It was up about 15% the other day. But regional banks all look cheap. There's this trend, I think, overall in society where smaller players are getting wiped out or squeezed, and the larger banks, in this case, I don't know if that's going to be the case, but it sure seems that a lot of people are worried about their deposits in regional banks. So we do have some regional banks in the portfolio. Columbia Banking System, COLB, was a recent addition. Real estate investment trusts, and you've got to be careful here because Forbes is not unlike other companies. We just had we had 2 floors in a building in Jersey City, and the lease renewal came up, and we're only going to take 1 floor.
Got it.
And I think that's going to happen. Well, that is happening throughout the economy. So if you're investing in REITs, be wary of office REITs, but hospital REITs, medical REITs. We just added one to the portfolio recently called Outfront Media. They're a billboard and outdoor advertising. OUT is the symbol.
Well, that's easy enough to remember.
Outdoors, And then you got from Daytona Beach, Florida, CTO Realty Growth. Most of the properties they own, Florida has the largest slice, but they are nationwide, and they're a retail shopping center.
Got it. Okay.
Best Buy, things like national retailers. Not to say that they can't go down, but it looks better than office. So REITs, banks. You've got the consumer staple companies like Campbell Soup, Hormel Foods, ConAgra brands, things like that. when the economy gets tough, the defensive stocks do show their stripes. It's worth having some of those in your portfolio. And then in technology, believe it or not, you've got, even though tech has been on a tear this year.
And people don't think of tech for dividends, but...
Well, Intel was a nice dividend payer.
Yeah.
Yield was over 5.5%. About 2 months ago, they cut it. But they cut it for a decent reason. I mean, with all this going on with Taiwan and China, can you believe that we've had the most essential manufacturing in the world going on in a country that's 30 miles from China? So Intel's building some foundries in the U.S. I think that's important work. Seagate Technologies, STX, another one, data storage. Unless we stop storing data, that's not happening. They're going to be just fine. They've come down from like 75 to 57 or something like that. Seagate. So tech, REITs, consumer staples, you name it.
Yeah. John, if somebody wants to find out more information, wants to see you following these picks on an ongoing basis, where can they go for information?
Go to Forbes.com/dividends.
Okay.
And that would be the best way to find me.
Awesome. John, it's really a pleasure talking to you. Appreciate the update. And thank you all for watching here on the Las Vegas Money Show.